All right. It has been a long time since I've done a Bitcoin market update, so I think it's well overdue. Going to do a nice run through of the high time frame towards the 4 hour. Just looking at some local stuff as well, since we've broken some structure back to the downside. But in general, the macro is still up until proven otherwise. First off, just looking at some metrics, nothing too crazy to say. We had a big spike in the longs coming in the last couple of 4 hour periods. That's now reduced pretty significantly with some more shorts coming in on the local side. Hasn't fundamentally changed the chart or the structure. It's still continuing uh, in a local downtrend, but in general, the macro, like I said, is still up. Funding rates are back at the typical neutral zero point zero 0.01. Positive funding rates incentivize market makers, liquidity providers to take shorts, and negative funding rates incentivize them to take longs. Effectively, for Bitcoin, it still costs money. Longs paying shorts. On the upside, to take limit long orders for makers or taker. Oh no, maker. There you go. The only big outliers there are some of the altcoins. Solana is getting heavily incentivized on the USDT perpetuals, but not so much on the token margin. So, like using Sol to long Sol as the underlying asset. So until we start seeing major switches, and like that's something I always look at is if the token margin, and these are usually large bag holders looking to expand or make money on the funding, as well as, use that to take leverage positions. That's still pretty standardized across the board. Looking over here at Kayotaka, this thing's pretty awesome. I'll share the link. This is a way to look at the order book as it exists on chart. So effectively, it's the order book heat map. It's aggregated across several different exchanges, and it's pretty awesome. And anyways, here I am on the 1 hour, just a little bit expanded look. We've had this huge block of us sitting above us at like 115.2, and this has been kind of in place since last Friday. It's been moved a little bit as price came up to it, but it's generally speaking been holding price down. So nothing too crazy to say about it other than, yeah, there's some local major pressure on the order books to keep price going low. That being said, we're finally seeing in the last couple of hours or since yesterday afternoon a step in of some bigger long positions below us. Now effectively, if the price starts moving away from the block and the block stays in place, we're looking at it as like a rejection move, right? But if the block, stays in place and the price moves towards it, because these are resting orders, it's effectively liquidity. We look at it in terms of acting like a magnet. So you really want to. It's all direction regarding the direction of price, and usually the price will migrate towards liquidity until there's been enough fills, there's enough pressure in the order book to push it the other direction. So keep an eye on this. It looks okay. I would want to see some obvious gains of like 115.2. That's like the local structure, but there's some bigger levels on chart which we'll go through as well. But the fact that liquidations or liquidity stacking below us is definitely a sign that there's some potential for some continuation, some sweep back down to like 110. There's actually a good level here, and some decent amounts of lower leverage liquidations as well. Going over to the chart on TradingView just to check a couple metrics. So in general, I'm seeing lots and lots of heavy resistance at 120. This has been kind of the main level for the last 3 weeks where we want to see a gain above. Any pop above 120, a 4 hour close is a very macro shift. Obviously, we're very far from that currently. In the more local structure, it looks actually pretty attractive if we see a gain of August at 115.8. So this is the major flip that saw the loss to go to the new lows. And effectively, when we see that as like the level that we lost, right? This level that we lost coincides with the previous low of the structure. That's the level to regain, which coincides with a very high time frame level. So that's the confirmation that we're kind of breaking up. In general, we've been downtrending technically since back in mid July, just because we made lower lows and lower highs. The fundamental move is still down in the sense that we're flagging structure, but there are some good upsides to this. So if we're looking at it in terms of liquidations, as an example, this is just the bands. This orange line represents some core liquidity in the overall market. A gain above the August, above these previous high structures, would really coincide with a flip that would probably see at least a move to like 117.5. Now, 117.5 is a key level, just because, obviously local liquidations and stuff, but also it's the volume center of the current move. Oh, that's the wrong one. One sec. There we go. Yeah, so volume center of the current move will likely act like a magnet. It's a bit higher, so around 117.8, but the biggest thing that obviously is affecting the current price is the fact that we're in a relatively volume dead zone where there's very, very little amounts of, we went straight up through this area. So when price goes back into the low volume zones, it tends to move a lot faster. Conversely, high volume zones, it moves much more slowly, usually. But looking at some of the levels, I'll just put the levels back on just because it's a bit easier to visualize and turn the VRVP off. Yeah, so like I said, there's some high time frame structure here, and since we haven't yet changed the direction or any type of significant gain to go higher, we are still looking to target lower until new highs are created off of this high. And for that to occur, we need to be this to be the local low and then gain a new local high. That would constitute some at least local time frame trend change to potentially shift us back up to target the very high leverage short liquidations that got a free ride basically since mid-July, so the last 3 weeks. So until something fundamentally changes there, I'm still targeting this kind of bigger block. We saw this as liquidity on Kayotaka, the order book heat map I just showed. So if we're going to see some type of major switch here, I would love to see this. This is my ideal move. We come back down to like 111, maybe go into this dead zone, this area of very, very low amounts of liquidations, and then see some major buyback reversal, like do it on a wick or something like that. That looks attractive as far as a potential shift. But again, we have not broken the downside trend until proven otherwise. The problem comes into place if we break below this and then start to get back under like 111. It starts to look really attractive to actually go break much lower, like 108, and we could be seeing a general major retracement. And yeah, so that's pretty much the long and short of it. You still got local downside price action. You've had some good tests, but you have lots of resistance in these zones. Like you got heavy resistance at 114.9, you got heavy resistance at the August open. And what we're looking for here are some sneaky 4 hour or daily closes. On the daily side, yeah, big break of structure. We're in this volume dead zone. We could easily flag out in this whole structure for weeks because it's such a low volume area. And the more pressing matter is really the weekly. The fact that we did a big bearish engulfing weekly candle is super not good for like a major continuation. Not saying that it's done, not saying by any means there's no evidence that the overall run is over. It just means that we're probably in a more protracted period where we want to see some significant gains to invalidate that. So realistically, all we're looking for is some gains above August to potentially take us back into like 117.5, 117.8, and back into the highs. Any gain now, I mean, arguably, it's not even that anymore. It's 119.4, the previous weekly open. Any gain above that is going to be a significant break in the overall structure. So I would say, yeah, that's probably the level I'm looking for the most. Any little sneaky closes above this stuff coinciding with previous weekly open, the big bearish engulfing candle, that's a probable major change. But until this overall structure improves and we start creating some higher highs and higher lows, we're still technically looking for lower. And that sweep of that low, like I said, looks relatively attractive until we gain above August, invalidating the local low and creating some local upside trending price action, right? So that's it for me. Take it easy and see you soon.